to this channel again. Today we bring you a market breakdown, another market breakdown, which came in a bit early. Normally we upload these on Sundays, but this will give you enough time to scour the markets and see what opportunities are worth putting your money on in the week ahead. Now, without further ado, ladies and gentlemen, let's get to it. So in front of us, we have the trading economics. Obviously, you know our strategy. It is 80% technical analysis and 20% fundamentals. So that means we focus more on the charts more than on what's happening on politics and economics. But then you don't need to be so much stuck on your technicals such that you don't know what's going on. So you must have a little bit of bias going to a week ahead. Now, on top of our focus here, the US consumer sentiments, jobs, the fundamentals for the week ahead. The University of Michigan consumer sentiments for the US increased to 86.4 in June from 82.9 in May, beating market forecast of 84. So with that said, the dollar is definitely going to react to those news, and TSX notches fresh records high, Postal struggles to gain. We saw that this week with the indices, with the stocks. Natural gas rally gains steam. Oil hits fresh multi-year high. The Canadian dollar is definitely going to appreciate this, and the European stocks and weak on a strong note. German wholesale inflation highest since 2008. This is also good news for our German 30 index, which we trade. But today we're going to focus on 5 currency pairs that we're going to analyze. Basically, we're going to start with the dollar index, look at USDJPY, pound dollar, gold, and the euro pound. Now, right in front of me is the dollar index, which measures the strength and the weakness of the United States dollar. Now, how we analyze the market, you should be used to this already. We use a method called institutional order flow. So we combine structure, institutional order flow, and chart trading, and how to look at candlesticks in a quite a different way than you probably used to, but I'm pretty sure you'll appreciate our manner of analyzing the market. Now, structure-wise here, we have this market we was enjoying lower lows, lower highs, lower lows, lower highs. We was enjoying a nice movement to the downside until structure was broken at this particular area, and then we had a new structure high here and a new structure low here. So this is what we're expecting to buy the dollar to the upside, but before the bigger upside movement commits, we still expect the dollar to push to the downside just a little bit, just a little bit. Let's go back to candlesticks for here. So man, very, very, very clean and nice price action we see here with the dollar index. This is what we're looking at, ladies and gentlemen. This is what we're looking at from the dollar index. So coming to the week ahead, we're expecting the dollar index to push a bit lower, Now, where is it going? This is very, very, very important. We saw this first impulsive movement, so now we're in a corrective manner. So we're coming to test this fresh area of demand before we can commit to the upside. So now, going deeper with the price action, basically refining and pattern separating. Remember, institutional order flow is basically a supply and demand and structure. So this is what we're looking at for the week ahead on the dollar index, ladies and gentlemen. Dollar index. This is one of the instruments or type of analysis that really help us here at Wall Street Institute and Company become profitable, because when you're trading most dollar pairs, you also need to understand the sentiments and the overall expected movement of the United States dollar against its code or base currency pair. So this is what we've seen here. Within this bigger corrective structure in form of a bullish flag, we have a bearish flag inside, so we're expecting the markets to basically break to the downside here. Just a second, let me expand that. Let me go to 4 hour. Try and find points of clarity here and basically refine my price action. So this is what we're expecting here. So this is what we're expecting. So we're expecting the markets to first move down. So actually this is the major movement that is expected for the week ahead. So we're expecting the market to move down before it commits to the upside. We're probably going to see the market stalling in this area before it moves to the upside, ladies and gentlemen. So this is exactly what we have for the week ahead for you guys, is basically short movement to the downside before that big movement to the upside commits. Now quickly let us rush into the US dollar against the Japanese yen. So once you understand what's going on the US dollar, it's easy to know whether dollar code pairs or dollar based pairs are going to go up or down. In this case, we're expecting the dollar index to move to the downside, and so is the USDJPY. Expecting the opposite to happen on the pound dollar. Now, USDJPY, same thing, ladies and gentlemen. Structure is very important. If you look at this, the market was just enjoying a nice movement. High highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. And then when the market moved down with this impulsive movement, we then broke structure here. Meaning, it's very important, meaning the market is no longer going to push further. So it has less chances, not to say it won't do that, but it has less chances or less probability of moving to the upside than going to the downside. So one can already say we have a double top here, but what is quite interesting here is that we have an impulse and then we have this corrective structure. You know what happens if you've joined our courses. By the way, if you want to join our community or one of our courses, hit us up on the links that are in the description below. So if you in one of our courses, you understand the nature of market movement structure. So here we have an impulse movement followed by corrective structure. So this corrective structure is about to end. If we can look at it, we also had higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then we had a break of structure here. We keep breaking the structure. More signs telling us that we're supposed to be going to the downside in the near future, right? So this is in line with the dollar index. This is in line with it might not form the exact shape or form, but when the dollar index gets to a particular level, key level, we should also expect this one to get to a particular key level. Now, I'm trying to rush here to make sure that we have this analysis just under 20 minutes or under 15 minutes. If we may, we will see. Right. So US dollar, Japanese yen. So this is what we're expecting, impulse correction. We are expecting a further movement to the downside. So probably to these lows or find a demand area there that has not been tested that we're waiting for the market to react to. Now, diving deeper with the price action, this is what we see here. Very clean structures and nice price action here. So we're expecting to find within this inner flag that is forming at this point, we are expecting to get another structure. Remember, when you curtain separate, this is when the market or everything becomes clear. So inside here, there's also this pattern here. So we had an impulse and this corrective structure here. Very, very nice, ladies and gentlemen. So this is what we'll be expecting here. So expecting the market to push further to the downside, maybe form another corrective structure here. As we know, we still have to retest this area before we can commit further to the downside. Now, that is it. So US dollar, we are more bearish this coming week. Now let us look at the pound dollar. Pound dollar is expected to move to the upside. Since we have more bullish, more bearish sentiments with the US dollar, Japanese yen. Now look at that. Look at that. Markets have been enjoying nice bullish structure. High low, high high, high low, high high, high low, high high, high low. We have higher high. We have higher lows here. My check is that we are supposed to make more high highs or commit to the upside. No. Going to the candlesticks chart, what do we see here? We had an impulse here, and then we have this corrective structure, which on top of my head, ladies and gentlemen, I can already see this. I can already see this forming, connecting these lows here, and then moving to a lower time frame, 4 hour. I think we're gonna have so that we can clean up our chart. We're also going to have a much clearer price action. Once again, scaling down with that bigger time frame picture will always give you the overall view of the market or where we're going. Remember, we're just looking for setups, high probability setups that are in line with our strategy. So if the AO, your edge is in play, we were talking about this in our trading rooms this week, that we really need to act on our edges. You know, we've been missing a lot of trades lately because the markets would give us our edge, but then fear would creep in and we couldn't take the setup. Right? It happens to everybody. It happens to everybody. So we have a nice fresh demand here, which has been tested already. Sorry, almost said taste. It has been tested already, and we have this pin bar here. So with that said, we are anticipating the market to push further to the upside. Now, remember, US dollar, Japanese yen, more bearish, and now pound dollar, we're expecting the market to be more bullish. So as the week goes on, we will be going deeper with the market structure to find areas of confluence. Now let us look at gold, shiny metal. Interesting movements from gold this week. I couldn't have a setup. I couldn't have a clear setup here. You know how dangerous gold is, so you need to be on point at all times. So what do we see here? I think we're still bullish on gold. We're still bullish. See markets enjoying high highs and high lows. So far, no structure breaks that I see on this. I'm just expecting the market to push a little bit further to the upside, targeting this highs right here. Right, let's get to it. Markets break down. So once you get the direction, remember the trend level signals should always be in agreement, ladies and gentlemen. So this is what we see here. We are in this corrective structure. So what we're going to do is look for setups that are within this corrective structure before we push to the upside. Right, so getting to a lower time frame, that H1. So we had quite an interesting market movement or structure here, if you may. So we have this flag, this bearish flag, where it had 1, 2, 3 touches. the market push lower. So we're expecting the market to push further to these lows before it can move to the upside. Now, trade this carefully, ladies and gentlemen. So gold again, with the dollar being a cold currency on gold, so we're expecting more upside with gold as well. Now, the next pair, probably the last pair we're going to look at, it is the euro pound, euro pound, euro pound, euro pound. Very important here. Remember when we looked at our trading economics, we also had some news or something that the markets was really looking at concerning the euro. So, excuse me, sorry about that. So, looking at the euro, we were enjoying a very, very niche down movement for quite some time. Market was making lower lows and lower highs, but right at this moment we had a break of structure, ladies and gentlemen. So we had an impulse movement with now the spring-like formation. I always call it the spring-like formation in the course so that you can make this. So we had this sharp movement, spring-like formation. So when the market gets into spring-like formation, this is where the patterns form. This is where the clues, this is where the ideas come in of what could be the next possible movement in the market or the next possible direction. So with that said, ladies and gentlemen, so this is what we're expecting. This is what we're expecting. This is what we're seeing. This is what we're expecting, right? Focusing is very, very important because by focusing, what you're doing is you're following a proactive approach in the financial markets rather than being reactive, probably being an impulsive trader as well. So this is what we're expecting here. We're expecting the market to come here for probably a third touch. If you've been in our trading rooms, if you've been in our course, you'd understand the 3 drive pattern, which is very, very important. So patience is required here. One can take the short setup and sell as the market is going down, but I would rather wait for the high probability setup. So this is what we're expecting market to come down here before we can enjoy the more bullish momentum to the upside, more bullish momentum to the upside in that manner. Sorry, first targeting this lows. So ladies and gentlemen, there you have it. We have the DXY, US dollar, Japanese yen, pound, dollar. We have gold, now the euro pound. So we're pretty much clear, not really clear because there are no guarantees in the financial markets, but we go into the markets now already having a picture of where the markets might go on the week ahead. Now that's it from me, ladies and gentlemen. Please do your own diligence. If you need more content, as always, hit us up in the comment section or contact us via WhatsApp, via email, or DM us in any of our social media pages. We do appreciate the support. We do appreciate the growth. We've been having some positive feedbacks lately. And those who do not understand how we combine institutional order flow, chart patterns, and market structure can hit us up to join our courses. Education is very important in anything, not just in trading the financial markets. So you need to educate yourself so that you have the right skills that can ensure your success in the market now. So that's it, ladies and gentlemen. Please enjoy your weekend and do not forget to prepare for the week ahead. You take some time off. That's very important. Sometimes we get consumed by the market. I'm a victim as well. I love the market so much that you find that, look at me now. The weekend, I'm supposed to be partying and enjoying my time, but then I'm on the market. So please, ladies and gentlemen,